Hello, this is the Daily Forex Report for August 5th. We're going to look at the U.S.-Japanese yen pair. This pair closed down, had a pretty good range for today. Overall, this pair is starting to move sideways. We are looking for it to potentially go as high as 86.88, potentially as low as 85.12. Look for some resistance around 86.50, and look for some support around 85.25. Now the Euro USD closed up today. We are looking for this pair to continue moving. It's moving sideways. It definitely has a bias to the upside. Look for it to potentially go as high as 133.06, possibly as low as 130.35. Look for some resistance around 132.65, and look for some support around 131.15. Now the pound US dollar pair, it closed higher, but had an awfully low tell on it. We are looking for this pair to continue moving to the upside, even though it's been moving sideways. Look for it to potentially go as high as 16006, possibly as low as 15727. Look for some resistance around 15975, and look for some support around 15815. Okay, the U.S. Swiss, this particular pair closed lower today, did create an inside bar, so we're going to look for the breakout. Look for this pair to potentially go as high as 10605, possibly as low as 10350. Look for some resistance around 10550, and look for some support around 10410. Now, as far as news announcements go, we have the net change in unemployment for the Canadian dollar being released tomorrow. Their net change is showing from a move from 93.2K to 12.5K, which would be a pretty large jump. Their unemployment rate for July, as far as percentages, looks like it's going to hold, or it's at least showing to hold at 7.9%. So if the news comes out that they've moved it, of course, that could affect the Canadian dollar. We also have the non-farm payroll for the U.S. being released at 8:30 a.m. Eastern Time. Consensus on that is things have improved from a negative 125K to negative 665K. So almost improving by half. That's definitely good news. Although the unemployment rate percentage-wise is showing an increase from 9.5% to 9.6% overall. Now let me show you in the U.S. Japanese yen. Let me back out a little bit. Actually, I want to draw a trend line. We have a swing trade opportunity, and for those of you that don't know exactly what that is, basically what we're doing, if we have a swing trade opportunity to the upside, this is what it looks like. We have a high, we have a lower high in the middle, and we have another high that's higher than the one in the middle. So it's a 3-bar setup. You also want the middle bar's low to be lower than the bar before it and the bar after it. So in this particular case, we're going to look for the pair to move higher. Here's a swing trade low, and we look for the pair, draw a trend line off of the lows, and look for it to move lower. So that is how a swing trade setup is created. Now, how would you determine a good place to potentially exit this trade? Well, let me show you two ways. You can draw a trend line from these highs that we have. That would be a really good way. Get a break here, move up to this area. Another very good way is to look for areas of support and resistance. I know I talk about that a lot, but it is very important. If you notice, we have an area of resistance here across numerous different sessions that we had, either closes or lows or highs near that section. Here it was support, and here it is resistance. And you can draw a line using that and use that as a potential exit as well. Now, another area that we have it, and it's a little bit closer to the actual trade, would be in this area. So what that looks like from, let me zoom back in, what that looks like from a trade standpoint, you have a buy right here at roughly 86.31. About 45 pips up, you run into your next area of really resistance where the market could come back against you, essentially. Next area is around 110 up, and a little bit beyond that you have 117. I would actually include these two prices pretty much the same. This would be a really good target overall. Now, it may not occur in one day. What you could do is look to buy. When you hit here, go ahead and move your stop loss, which probably should be right about here. If you want to go below previous, or right here below previous support, move your stop loss to break even at that point, and then look for it to go on up maybe the next session or so. We do have sessions that are fairly large. This one would be, we're looking about 45 pips, 95 pips to entry, or I'm sorry, to our first exit, and then another 160 pips on up. We have had days where the market moves that much fairly recently. That's 127, then the next day 222. So it can happen. It can move that quick within just a couple of days. But this is a swing trade setup looking for potential exit. If you wanted to just take the first one, you could, or you could go to break even and go ahead and move on up. If you notice, this line and this line catches a lot of market movement in between here, sideways market. So once we get into this area, potentially it could take a couple of days to get hit up here. Well, that about does it for today. Until next time, this is Jason Fielder. Good trading.